Well, let's welcome in our market master of the day is one of the largest fund managers in equity side in India, S Naren, Executive Director and Chief Investment Officer at ICICI Prudential AMC is joining in. Naren, it's a great day to have you with us here on the program. Thank you very much. Great day not for the market, but important day, let me rephrase. Naren, how are things set up according to you? The budget, what were the two big sharp points that you took away from it? There's this tariff bit. Expectation is it'll blow over. It's not permanent. And of course, there's monetary policy ahead. Where does all of this leave markets?
No, clearly it was a budget which was focused on consumption for the middle class, and they gave money to the middle class. Whether they'll choose to save it, repay loans or consume, this is the question for which we don't have the answer. But having said that, that is what the budget is about. And of course, today it has been taken over by what has happened in US on Saturday night. So we have a situation where the budget is no longer the central piece at this point of time. It has been taken over by that. But that's where we are. But having said that, this was needed because over the last 3 to 4 years, we have had a situation where the infrastructure and capex side of the economy has done very well, but the consumption side of the economy had not done well. So, as contrarians, we have always believed that, you will always have these cycles, and therefore the consumption side of the economy had to do better, and the budget gave that shift. So it's a very positive budget from that point of view, and it is the right thing to do at this point of time.
Naren, we had Neelkant earlier, who you know well. And I asked him whether the messaging from the government is shifting away, taking the pedal off infrastructure spending, because maybe that's all. I mean, the government can only do that much, the central government. Definitely it is focusing on consumption. As a money manager, Naren, what does it mean for portfolios, you think? You think there will be a difficult shift away out of these infra kind of names to consumption names? You've complained about the very high valuations, infra, capex, etc. kind of stocks have traded at.
Yeah, actually, for us, it was very logical that, for example, there was a time when we used to complain about very high valuations, consumer stocks. And for a change, we do have consumer stocks in our value fund, for example. So I would say that, this kind of shift was very logical on the part of the government. And so we don't complain. And I don't think it's a total shift away. It is just that you have to always, I think both the government and the regulators have to keep on doing things to help the areas which are not doing well, and actually to not give further support to the areas which are doing too well. I think that is the role of the government and the regulator, and that's what they've been doing. Last year, for example, the regulator actually slowed down personal loans. That was again a very good step. So I believe these kind of steps have to be done on a continuing basis. And as fund managers of public money, we also have to be very cautious in sectors where things are very costly. So we have been cautious on small and mid cap. And we have been more positive on sectors which we used to be very negative on, like consumer staples, etc. So I think that's the way things should be. And that's the way I think long-term money is made, actually.
So this is exactly what we were sort of discussing with Neelkant as well. The question is now, what is the change in the portfolio? And I'm not talking about short, tactical trades here and there. Someone who's looking at least a 1-year portfolio, 2-year portfolio. Would you recommend that person cuts down on capex a little bit and loads up on consumption, discretionary consumption? Or no, because you yourself are saying that it's not like the government is taking the focus totally away from capex. From a portfolio stance, 1 to 2 year view, what is the kind of directional change that you would recommend, if any?
Yeah, I think from a portfolio stance, what we've been saying is it is actually small and mid cap, which is really very costly. And that is the area where over the last 1 year, we've been advocating people that they have to be cautious. So we closed our small and mid cap for lump sum investment as a result. And that is the area where I would say that even today, after the correction, valuations are still much higher than large caps. So that is the area where we would be even more careful. And I would say across various sectors, small and mid caps have got overvalued. And that is the bigger problem in the market than even large caps across. If you look at large caps, I would say there aren't too many large caps in the infra capital goods space itself, so that for us to actually really think about. And that is where we are being careful, and still I would say you have to be careful in small and mid caps in various capital goods space or infra space. In all these spaces, you have to still be careful wherever the valuation has gone up too much. But I would say you have to be careful in capital goods, in small and mid caps across sectors.
All right. Hi, Naren. Good to see you in. And you've been making this point, right? Cautious on the broader markets in comparison to the large cap names. Naren, earlier this morning, we were highlighting a few of those stocks, like the chemical stocks, some of those molecules in the US, that they export out there. That could get a bit of a booster shot because if these tariffs are imposed on China. In that backdrop, I wanted to ask you, what is your contra play you're looking at? Is it chemicals? Is it metals? There's a lot of uncertainty out there. Or is it cement? Some of these sectors haven't done well. So that's why I'm just pointing out a few. But what would be the big contra theme that you're looking at?
See, clearly our contra theme over the last 1 year has been asset allocation because people are just not willing to invest in debt. Clearly, chemicals was one such contra theme also, but it is not a very large sector. But chemicals has done very badly in the last 3 to 4 years. So that it was a contra theme, if you ask me, but not a large sector from that point of view. But our contra theme has been asset allocation because no one was willing to invest in debt. And it was such a trouble to get people to think of even asset allocation and hybrid funds in a big way, because people said we'll invest in small cap, we'll invest in micro cap, we'll invest in SME IPO, but we will not invest in asset allocation. So our big contra theme actually was to choose people to invest in asset allocation. And today, as we speak, it's very heartening to know that today many of the hybrid funds that we run have delivered as well returns as many of the small cap and mid cap over the last 1 year. Primarily because of the last 1 month, and that's been a happy feeling because most of the time we used to be questioned as to why you are recommending cautious stances all the time, and that has worked luckily in the last 1 month.
And Naren, just to come back on consumption, where you've said that you've recently started taking a little more positive stance on the sector. I'm just trying to understand what kind of re-rating or multiple expansion can we expect? Because the other argument is that, how much do you want to pay for, say, 4-5% volume growth? I'm talking about consumer staples. So do you see those multiples going back to the heydays of, 60 times, 70 times? And again, if I talk about the other end of consumption, where growth is visible, now whether it's Trent or Zomato, these new age consumer stocks, discretionary consumption, jewelry companies, hotels, what is a reasonable level of, PE expansion that you would be comfortable with?
This is a complicated question, and this is what we keep debating. Frankly, yet we are not yet in a situation where it's possible for you to actually bet that things will zoom up from here in consumption side. I think because the sectors have got re-rated already in 2-3 days significantly. So, we have to do a fair amount of bottom-up thinking. And I don't think we are in a situation where you can get big returns from the market at this point of time, which is why our recommendation has still been asset allocation over everything, large caps over mid cap and small cap. Clearly avoid SME kind of areas, avoid unlisted kind of areas. This is what we're saying. We're not in a phase where you can make mega returns. That doesn't mean that these stocks are going to fall from here. I don't think that is also true at this point.
Right. What about Naren? Asset allocation has been such a big talking point for you over the last year and a half, maybe 2 years. Gold has done so phenomenally well, Naren.
Yeah,
it's just amazing. Almost $3,000. What's your view from here, Naren?
It's impossible to tell people at this point of time when you're doing asset allocation, invest in gold on just like that, because gold is a phenomenal asset when you see the geopolitical problems at this point of time. That is why multi-asset is the only way in which we can think of gold now, because there's just too much of problems on the geopolitical side. Each country wants to levy duties on other countries. So at that point of time, some investment in gold is okay from an asset allocation standpoint. But would we like to recommend standalone investing in gold and silver at this point of time? I don't think so. I think that phase is over. that phase of being very positive on gold and silver standalone is over for us in our framework.
One sector, usually I don't ask sectors with you, but oil marketing companies, right? Look at HP, BP, IOC, the stocks will all come up. They're all down 6-7%. And the question many investors are asking is, I mean, looks like from what the numbers have been presented, they'll have to bear the LPG burden, the subsidy burden. Any thoughts? Have you looked at that? I mean, that risk is back.
Anything which falls off a cliff and companies with good amount of assets and oil marketing companies like that, if you take a view that oil is not going to shoot up, I think those are all sectors which are not that bad after a big correction. That is how we look at things from a contrarian framework. So if a sector has fallen off a cliff and, these are all companies which can't be created in India any longer. So I believe that's why we wouldn't be so negative after a big fall, clearly at this point.
Okay, well, that's the framework and always contrarian, one of the few true contrarians out there. Thank you very much, Naren. It's a pleasure having you with us here. Thank you for joining us here on the program. Let's get Samir back on, right? Samir Arora, founder and fund manager at Helios. Samir, good to have you with us here. Thank you for waiting. Appreciate it very much. So what is top of mind to you? Tariffs or the consumption boost here? And what will drive markets from here?
So on a relative basis, it will be the budget in the sense that actually the budget was good and we'll talk about it. But if the overall markets are down a lot, then India may outperform because A, it's not directly affected, and B, don't worry about markets like Taiwan because they have been closed for a week. So if you just look at how TSMC ADR was trading during this period because of NVIDIA and others, and then the TSMC local fall. So don't get totally carried away. A little bit you're allowed to get carried away. But the point is that the budget was good and this tariff situation is bad. But the tariff situation doesn't look as if it's going to be there for 6 months and 9 months. I mean, these guys have to be able to demonstrate a little bit about the demands of Mr. Trump on fentanyl and all. And I read that Canada is saying, see, we bought these 4 helicopters and we bought some drones and whatever else they can demonstrate. At least this doesn't look like this itself is a trade war forever because the ask is not related to trade as of now. It is related to reducing immigrants and drugs, which actually in theory are easier to show by saying we have, more forces, more tracking, more inspection, whatever.
So it's not permanent, and that's exactly the point that I was making earlier as well, that it's easier to do. I'm surprised why they've not done it. Put out a statement, strong statement saying that we're going to do everything, all of this. I don't know.
And I think it's because they are upset in general with each other. But actually, it's not started yet. It is supposed to start tomorrow. And I think Trump has just tweeted or whatever has commented that he's meeting them or talking to both these guys today. And China, realizing that this is just a bit of drama, has not said anything back. So it is bad, of course, but it's not like this is it and now, therefore, this is like 1930 when there were trade wars and markets fell. But right now, part will overshadow the fact that it was a good budget.
Samir, there is the immediate reaction to play out. Sort of, how do you look at that? Because for us, now I was trying to find silver linings. The only silver lining I could see for India was that finally the US market is buckling. Maybe for
That's
a short.
also one positive.
Yeah, so your thoughts on that?
No, so that is that is one of the points, but I thought we were talking budget first. But that is, of course, important because this obvious thing that you will sell emerging markets and go, of course, they will say even more improves because currency has strengthened. US and Indian currency right now looks like 40 basis points down, about 86, 90 or something. So these things, now you can spin it both ways. But in general, beyond a point that the fact that you can't put everything in one basket, particularly for global investors, long-term investors, and there are fund managers who cannot put it in US, they themselves. They will not go to their investor and say, please take my money and put it in US. So the emerging market fund, the Asian fund, the Asian emerging market fund, global fund. And then there is this other side of people saying US has gone up so far, too much, exceptionalism, US will not last. Ruchir Sharma keeps saying that there'll be some followers of that thesis also. So beyond a point, that trade is not so important that, people will take money from India and go to US. I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done.
All right. Hi, Samir. Good to see you. And Samir, since you spoke about FI selling, do you think it's getting to the fag end? That was the hope at the end of 2024. And bam, 2025, they're selling even more. Do you think,
so actually, if you look at it, look at it, September was a massively positive month for India, some 7-8 billion positive. And October was negative, some 10 billion.
Yeah.
Then November was sort of zero-ish, 1-2 billion minus. And December was plus.
Yes.
And again, Jan is big negative. So now we have to make some story. We can't say random. So the story which has to be consistent is that in October, they were thinking that US positioning and, Trump winning and dollar strengthening and all that, which happened. Then December, they were positive again. And Jan, again, negative. One reason has to be India related. That Indian results came out very bad. Because if you see, Taiwan was not negative. It's an emerging market. It is an anti-US. I think Korea was negative, but not a lot. Basically, the entire emerging market negative in January. I think January or maybe a little. February just started. So must be January. Was I think some $7 billion negative, and all of it was India. So now if India improves or it corrects or generally some stable thing is found, this continuous selling does not have to happen. Then it will turn to buying also. So I'm saying the default in general is not that foreigners sell. The default is they buy and sell, but in the end, they mostly buy. Mostly means last 25 years, even if you see last year, there was sort of net zero. Now, why were they net zero? Because they sold in secondary and they bought primary. Now, why did they buy primary? Because the primary stocks are different. They are not the old banks, the consumer, the Reliance, the whatever. They are these IT type companies or tech companies, whatever, this consumer tech or fintech or whatever tech. And so out of your $800-900 billion, you have switched some $10-12 billion to the new age kind of stuff. So what is so unreasonable about it, except that is done between secondary and primary? If it was done between secondary and secondary, you would have said flows have been flat for last year.
Right. Got it. Samir, so for viewers who are watching, right, there is a boost to consumption. People are still invested in capex, infra type of names. There is one view which says that this could be, 6 months down the line, we could look back and say, well, this was the inflection point. Not because it is 1 lakh crore and is going to do, but basically it was a shift in focus, it was a shift in message. So the style factor will change from what you should look and do here. So I just wanted you to your comments on that, whether it will really be so.
I think it is one of the best budgets that we've seen in many, many years, and I tweeted it's a dream budget.
Yeah.
So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. Number two, you have not taken money from one group and given it to the other, which would make it, that, you are deciding. Here they are saying, you just give us less money. It's not that you've taken it from one, given it to the other. Third is, you have not said that, you've cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. Other than that, on infra and all, so then one more issue people I see in the reports that I get and on Twitter and all, only 3% people are affected, only 4% are affected. So if the government announced that there'll be a new road being made between, I don't know, say Faridabad and Meerut, only 2% of Indians will use it. The South guy will say, how do I care you made a road there? Everything that you do, only 2-3% people, 5% people are affected. But the reality is that there is no capacity to invest more in a road because the big roads are being made. And if anybody believes that a road that is not doing well, is not made well, is because of money, or is it because of management, or is it because of corruption, or is it? So learn from the US. I'm telling you, Donald Trump is going to be a massive positive influence everywhere in the world, including in India. Yeah. Because you will realize that tax cuts and efficient government and cutting expenditure and all that. And secondly is, for whatever reason, which is now history, this year money could not be spent on infra and could not be spent maybe a little bit on defense. So now next year, what is the point of saying I will give 25% more budget to that section? It is better to say I will implement what has been done. But the reality at the end of the day is that money with the public is the best way. And in this case also, since there is a temporary or cyclical or short-term slowdown, it is better to deal with a temporary or cyclical or short-term up by saying, hey, take money.
All right, fair enough. Samir, thank you very much for joining us. Great speaking with you as always, and come back again.
One, two, three, 1, 2, 3, 1, 2, 3. हाँ पहले आ रही थी, अभी कोई मुझसे बात नहीं कर रहा है।
नमस्कार, घड़ी में बजने वाले हैं 4 और मैं दीपाली नंदा आपके लिए लेकर आ गई हूं आवाज समाचार। बुलेटिन की शुरुआत करेंगे इस वक्त की बड़ी हेडलाइंस के साथ। खराब ग्लोबल संकेतों से बाजार में दबाव, लेकिन आखिरी घंटे में सेंसेक्स निफ्टी निचले स्तर से सुधर कर हुए बंद। मिड कैप और स्मॉल कैप में गिरावट। पीएससी, एनर्जी, तेल गैस इंडेक्स सबसे ज्यादा फिसला। संसद के दोनों सदनों में विपक्ष का हंगामा। महाकुंभ हादसे के सही आंकड़े जारी करने की मांग। यूपी सरकार पर आंकड़े छिपाने का लगाया आरोप।
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The US dollar soars and stocks plunge across the world after US President Donald Trump puts pen to paper on the tariff threat, imposes a 25% additional tax on Canadian and Mexican imports and a 10% additional tax on China. Canada hits back with retaliatory tariffs. Mexico and China vow to do the same. The Indian rupee falls to a new low against the dollar, breaching the 87 mark for the first time. Sensex down over 300 points. Mid-cap see sharper cuts. Shares of oil marketing companies slide after no mention of LPG subsidy in the budget, but Petroleum Minister Hardeep Puri says government is committed to compensating the losses, which is more than 29,000 crore rupees in the first 9 months of this fiscal. You heard the budget speech on CNBC-TV18. Now watch the budget makers decode it on India's #1 business news channel. North Block Secretaries live and exclusive from 4:30 p.m. on the budget verdict. Rahul Gandhi targets the government's economic policy in Parliament, says the Make in India initiative has failed and alleges that Chinese troops are sitting inside Indian territory. The BJP hits back as Lok Sabha sees heated exchanges. Volkswagen India challenges tax demand of $1.4 billion before the company will avail all the available legal remedies against the tax demand. Loudspeakers to go silent as campaigning for the Delhi Assembly elections come to an end today. Voting will take place across all 70 constituencies on the 5th of February. Aam Aadmi Party, the BJP and Congress are locked in a three-cornered race. Results on the 8th of February.